Hi, welcome to another session of the couch session, and my name is Wafula Mtehele, and I'm going to be your host today. Last time we spoke about it was more of an introduction to what these couching sessions will be about, and I would like to help entrepreneurs out here to be able to structure their businesses. And we spoke about the three phases of structuring your business as an entrepreneur. That is the research phase, then we have got the traction stage and the optimization stage. But before we go into the deeper, the details or the flesh of the matter, or the matters that we're going to be discussing in future couch sessions, I mentioned in the last video that I was going to introduce to you, or we're going to talk about the tenets of business and management, and there are quite a number. What is a tenet? A tenet is basically a principle. It's a guiding principle or a mindset that as an entrepreneur you need to adopt and constantly embrace and think about how do I advance and develop around this principle. Okay, how do I manage my business? That's why it's called a tenet of business and management, because it's a certain posture of the mind that as an entrepreneur you need to acquire so that you can be successful in your endeavor. And one of the key tenets that we are going to be talking about today is profitability. So we're going to talk about profitability as a tenet of business and management, and why as an entrepreneur you need to adopt a mindset of profitability in order for you to manage your business effectively. And so we are going to begin by defining what profitability is. In the competitive world of business, one of the things that businesses strive for is to be more profitable, but while at the same time still maintain their market share, because you know that profit is akin to your margins, and your margins depend also on how you price. So your pricing strategies are going to determine how competitive you are in the market, and also depending on the approach that you took to define your pricing, this will also affect your buyers or your target market's ability to afford your services or your products. And in effect, that will also affect your sales volumes. So you have to be very careful to balance pricing and profitability. But let's go to the heart of the matter, which is that mindset of profitability. Profitability is a metric. That is the first thing that you need to understand as an entrepreneur. Profitability is more of it's a number or a figure that you're going to track in your business, just to understand that your business is healthy. So it's a metric that indicates the health of your business. And profit is not really, though it might be, it's not really tangible or money that you have in the bank at the end of a business day or at the end of a trading period. Profit is a metric that measures whether your business activities are generating some gains for the investor, which could be yourself. So it's very important for an entrepreneur to track profitability as one of the first metrics in running and operating their businesses efficiently. Okay, so profit is akin to margins, and usually what happens is you will sell your product and services. You will generate some revenue, and from that revenue you are going to have to offset some expenses, which could be direct expenses in the purchase of raw materials for your production, or meeting some costs which you need to meet before you're able to deliver your service to the customer. So those will be classified as direct costs. You also have overheads which you have to cover in your business. So also considering the overheads, once you remove the direct costs, what you get is gross profit. Okay, and then from the gross profit, you still have to be left with enough funds to cover your operational expenses, and then you're left with net profit. There are other items, of course, when you are looking at profitability, but they're not important for our discussion today. Maybe in another couch session we'll talk about what EBITDA is and why it is also an important metric to track. So let's delve into the heart of the matter now. Why should an entrepreneur adopt a profitability mindset? And what are the tools that the entrepreneur will use to make sure that they keep track of how profitable their business is? Now, one of the key things that you have to understand is that profitability as a metric is an indicator of business health. And making positive profits month on month is a good sign for the entrepreneur to know that their operational activities are generating some positive returns. And so it motivates them to keep going, to keep improving their processes, and also to understand. It's also an indicator that the market is receiving the product or the service well. If they're in profit, that means they're either moving sufficient volumes or they are charging appropriately to make the right kind of margins. Okay, and also their business model is sustainable. Now, profitability mindset helps the entrepreneur to constantly question and interrogate things or aspects of their business that might affect that profitability. Without tracking profitability, then it becomes we a going concern, or are we no longer a going concern? What do we mean by a going concern? A business is a going concern if it can still continue in its operations and it's giving the stakeholders or the investors a return on their investment, and there is still enough left to invest in innovation, in employee development, in research and development, in expanding the business, in investing in assets such as maybe equipment, or improving, getting better tools or infrastructure for your trade or your business. One of the key things that an entrepreneur needs to maintain, while keeping in mind this profitability mindset, is while tracking the numbers, then they have a reference point for them to interrogate their operational efficiency or the operational efficiency of their businesses. And of course, because a business is an investment, you want an investment that is operating at its optimum. Okay, so an entrepreneur will definitely have to interrogate his processes to find if there are any items that or any aspect or element of their activities that might be costing the business unnecessarily, which eats into their profits or into their margins. And one of the key things that it's one of the advantages of having this profitability mindset is that it forces the entrepreneur to define business processes or key business processes in every department or every aspect of their business or value dimension. And in another couch session, we are going to be talking about the business activities that add value. Okay, because as a business, you are a value chain. That is one thing that you have to understand. And the profitability mindset helps you to picture this value chain as a groupings of activities that add value to inputs or raw materials or whatever you're getting from your suppliers. You add value, and then you squeeze from the activities within each of these components of your value chain. You will experience some costs as an entrepreneur, okay, in the process of adding value to your products or services. So it's upon you as an entrepreneur to make sure that your price point for your products or services is sufficient enough to cover the cost of all these activities and still leave you with some margins which you can use to improve or upgrade any of these activities. So some of the things that an entrepreneur needs to track in their business are the logistics, things like logistics. How much is it costing us, and what is the process involved? Is it unnecessarily long? Are there things that are causing wastage? So it helps them also to prioritize activities and also to prioritize investments and to focus on increasing the efficiency of their business operations, because the efficiency of your business operations, whether you like it or not, actually does affect the profitability of your business. And you might want to also maintain a record of your profitability, because in future, when you are seeking funding, one of the things that investors look at is your track record in terms of profitability. And if you have a good track record, I'm not saying that you should make a profit every month. There's some months you might make a loss. Maybe you had to foot some major expense out of your business that was unforeseen, or something could have happened that could have caused you to experience a loss. But then you should make profit on more months that you're making losses than you're making losses. And that's a healthy business. So it doesn't mean that you will always make profit. Also, it's not a good sign when you're always making losses. So when you make a profit, the point was, when you make a profit and you are able to monitor this profit consistently, it gives you room to think about and to also confidently know that a certain percentage of this margin will be invested in improving our processes. So how do you improve your processes? First of all, you have to define them. So you see how having a profitability mindset helps you to go deeper into defining each and every step of the activities in your business. And if you look at the model of the value chain, we have got primary activities and you've got supporting activities. So the primary activities are the activities that are directly involved in adding value to the product or the service that you are selling to your target market. And these activities are defined in your business, and they are going to be executed by people, and there's going to be expenses that will be experienced in that process. So these expenses are what you pay from your revenues. So making sure that you have sufficient margins enables you to sit down and interrogate your processes and really question whether your processes are efficient to the point of generating margins for your business or healthy profits for your business. So operational efficiency is one of the things that come out as a benefit of developing this mindset of profitability. Another thing that helps entrepreneurs in when they have this mindset of profitability is they're able to adopt sustainable pricing strategies. In another couch session, we're going to talk about pricing strategies and some of the models that have been developed that can help you to think out your strategy. There's one common one that I like to use called the Bowman's clock. So you might want to either focus on quality or focus on, are you quality driven or are you price driven? So that gives you 8 points around the Bowman's clock, where you can set your price and still be profitable. So you could have high price and high quality. You could have low price, low quality. You could have high price, low quality, or high quality, low price. And of course, those 8 points are just reflections of your kind of strategy for entering a market or staying in a market. And how you define your price will have an impact on the revenues that your business is going to generate. And this will affect the profits of the business. So the entrepreneur needs to look at what the market can afford. Okay, so the buyer power is a determinant in your pricing strategy. And also what is your business model? Are you just looking to move volumes, or are you targeting a very specific demographic? In which case you can actually achieve high quality and high price at the same time, because you are targeting a specific demographic and providing them with a very high quality product and charging premium for it. At the same time, so these are targeted customers. So having a mindset of profitability will ensure that you price appropriately for that target market, and since you may not really move volumes, you're going to have to make sure that you are still making a margin on that business. Another alternative would be low quality and low price. Okay, so here you're just looking for a small margin, but you move volume so that you can be able to generate sufficient revenues to cover your costs. Okay, good. Another reason for having a profitability mindset for an entrepreneur is that it enables you to have a handle on your on controlling your finances. Okay, your financial control and management. And it's very important for an entrepreneur to track their expenses and know just what is the impact of each expense item on their margins, and just how unnecessary are these costs. So it's very important for an entrepreneur to have a handle on their financials. And like I said earlier, there are three main tools that an entrepreneur will need to use to make sure that they consistently track and control their financials. And this would be the income statement. The income statement will just be, I know not many of us as entrepreneurs are accountants by profession. I myself included, I'm not an accountant. My background is engineering, but since I'm also an entrepreneur, I had to learn and understand how to read and interpret financial statements. So as an entrepreneur, it's very important for you to train yourself how to interpret financial statements, and one of those is the income statement, which you should receive on a monthly basis from your accountant, or if you can develop yourself, or if you can retrieve it from any system that you are using, be it QuickBooks or any accounting software, where you can be able to key in your transactions and track, even Excel. You can even use Excel to track your business activities and expenses and see what's the impact on your revenues. Are you making a profit or are you making a loss? So you will need to track your gross sales or your gross revenues. On the income statement, you'll need to look at direct costs, which are direct, how best to put it. Your direct costs are involved in production, like for example, buying raw materials for producing your product. That is a direct cost. Labor costs for the production process, that is a direct cost. Electricity, things like power, those are direct costs. Okay, then we have supporting costs or operational costs or administrative expenses. So these ones are used, they have to be covered by the business for you to be able to continue conducting business. Okay, so when you deduct your direct costs from your revenues, what you get is gross profit. Okay, then from the gross profit, that should be sufficient for you to cover your administrative expenses, which include probably salaries and wages for your workers or your employees who are not directly involved in production, like for example the accounts guys, the sales guys, the engineers. Those are just your other staff that support your business, so they are either an administrative cost or an operational cost. Okay, then of course there's rent, that is another indirect cost. There is internet, fuel or transport, there is phone bills. Those are indirect costs. So once you remove these indirect costs also from your gross profit or gross margin, what you'll be left with is net profit. And of course you still need to pay your interests, your taxes, and you have to accommodate depreciation or depreciation or amortization of your loans. So those are considered as expenses in your current trading period, and after you deduct that, you get another figure down there. So just sit down with your accountant and let them walk you through how to interpret an income statement. Another important tool that you need to have is a balance sheet, which you need to track on a monthly basis. So the balance sheet will give you a position of how your resources are distributed in your business in terms of the funds. So you'll have your assets, and then you'll have your liabilities. So your assets, both fixed and current assets, and then you have long-term and short-term liabilities, and then you have owner's equity. So that is how much you put into the business. So how much you put into the business combined with how much you borrowed to put into the business should be equal, or should sum up to the assets that the business has. And this profitability is reflected also in the balance sheet in the form of owner's equity. So if you make a loss, it's the owners or the investors who are losing equity in the business. If you make a profit, they are gaining. The owner's equity is increasing. And a portion of this, the profit, will also help you to determine how much you can pay out as dividends to shareholders, or even to employees as bonuses. But without having that profit figure, then it becomes hard to determine how much do I pay to my employees, how much in profit did we make for the last financial year. So how much do I pay my employees in bonuses? How much do I pay the shareholders in dividends? And how much should be retained in the business for expansion, for development, for marketing, for innovation, and for advancing our business, moving the business to the next level. So that is one of the other key things. The other tool that you need to make sure that you adopt and track very closely is your statement of cash flows, because cash is king in business. It's very important to have healthy cash flows, because they can cushion you in times of uncertainty, and also they can help you to mitigate risks or to prevent your business from sinking. And also it makes you more agile. It's easy for you to adapt to the changing market situations when you have cash flow. And you can also monitor the sources of your cash flows, which could be investing, because your business can invest in other businesses or in financial instruments or in other things that can bring in revenues. Okay, so this will be cash flow from investing activities. Then you have cash flow from financing activities, okay, which could be loans or direct injections into the business. And also there could be cash flows from operating activities. So actually your cash flow statements will give you these things: financing activities, investing activities, and operational activities, which now is the business activities. So by monitoring the figures, you're able to tell whether your operational activities are giving you sufficient cash flows for you to be able to meet both your short-term and long-term obligations. Okay, so it's very important for you as an entrepreneur to make sure that you are on top of your finances by using these three tools: the income statement, the balance sheet, and the statement of cash flows. Okay, of course there are other things that you're going to be looking at, and we're going to talk about those things in other couch sessions, but having these three statements is very important. Now, another thing that as an entrepreneur you need to make sure is that you don't just have flat figures. You have some kind of comparative between periods, so you could compare last month's performance to this month's performance. First of all, you should have like all items on the expense should be a ratio or a percentage of the revenue, so that you know which item am I spending more. Okay, so that's a comparative. I'll give you some kind of insight into your expenditure. Then you could have a comparison of the current month to the year to date. Okay, so if you are let's say you're in January and now you go into February, you should have a comparative statement of income statement for February compared to the 2 months combined. Then when you go to March, you're looking at the income statement for March compared to the year to date, the last 3 months. How are we comparing? Then of course you can also have comparative similar periods, like this year same time last year, same time as this year. Let's say March 2022 and March 2023, or June 2022 and June 2023. What was the performance? And it's very good for you also to take notes on what have you done well that month, how have you managed, what measures did you take, what strategy did you adopt to give you this picture or this performance, so that in future you can be able to see what is our optimal cost structure, and then you adopt that, and you embody those in your financial policies that will help your business to become more optimal. And this is why it's important for you as an entrepreneur to familiarize yourself with your business financials. Okay, good. So now 2 more things before we conclude. One of the things that the profitability mindset helps an entrepreneur is in allocating resources, because resources are a cost and processes in your businesses are also a cost. So when you're looking at profitability, you are going to assess to which, let's say for example, to which projects are you going to allocate resources for you to realize better margins? To which activities in your business are you going to allocate resources, and how are you going to allocate those resources? And resources include both time and money, and also infrastructure. Where are you going to put your focus on? Will it be marketing? Because marketing has a direct impact also on lead generation, and of course how best you're going to convert those leads into customers so that you generate revenue for your business. So you're looking at profitability, enabling the entrepreneur to allocate resources more efficiently. And also in future, as the business grows, you might want now to scale up or to expand, and this is the time when you now will be seeking funding. So as an entrepreneur, you need to have all these records in place and make sure that your business is healthy profit-wise and making healthy margins. This will attract investors. So investors are looking for a track record of profitability before they can put money in your business. And also it helps you to do projections. So projections of your sales, future sales, projections of your expenses at a certain sales, so let's say your business is generating certain revenues with its current configurations. So it is very easy for you to ask for growth funding based on your projection, which means now that you are able to picture a bigger configuration or a different configuration of your business and the corresponding expense structure, and also the expected sales that you're going or revenues you're going to receive. So this cost structure is your funding needs, and that is how you're going to attract investors if you show that you understand the numbers in your business, and also if you show that you are able to manage your cost structures optimally to the point where the investors will realize a positive return on their investment. So I hope this session has been very informative for you as an entrepreneur. Business is not easy, especially in current tough economic times. So it's very important for you as an entrepreneur to be more proactive in your business by taking the initiative and the pains to understand it, to understand all the processes in your business, to understand every aspect of your business, to constantly cultivate certain mindsets by putting yourself in those spaces where you can be able to develop those mindsets. And of course, profitability is one of them. It is the most common one. Everybody goes into business to make a profit, and you know that you have to sell at a higher price than your expenses or your cost of production for you to make a margin. That is basic. But again, as your business grows, it becomes more complex. So you're not sure, am I in profit or am I making a loss? And how can I sustain the profit making? So in conclusion, I would like to encourage you to take the time to just understand how to interpret your financial documents, the income statement, the balance sheet, and the statement of cash flows, and also define processes in your businesses. Define your processes, define your activities, and understand the associated costs to those activities, and also the associated cost to the resources that your business needs to run, and how best can you optimize for better margins which you can use to improve the business. So in another couch session after this one, we're going to talk about the next tenet of business and management. That would be customer focus or customer centricity. So I hope to see you then.